If you ask anyone who is the richest investor of all time, everyone will point fingers at Warren Buffett. And that's not by accident. He started investing when he was just 11 years old and built his net worth to over $87 billion at the time of this script. To an average person, the stock market seems so complicated where no one seems to clearly understand what's going on. Whenever things seem to go in the right direction, we end up facing a financial disaster. But unlike everyone else, this guy seems to know a secret formula when it comes to investing. Over his life, he continuously made successful investments over and over, and he is considered by many as the greatest investor of all time. He was so good that just by the age of 16, he already made $53,000. Can you imagine making $53,000 from the stock market before you hit 16 and still be rejected by Harvard? I can, because that's exactly what happened. Do you want to learn how to invest like Warren Buffett? Do you want to find out his secret formula? Then stick around because we are going to take a deep look into Warren Buffett's investment portfolio. Warren Buffett is a long-term investor. He doesn't care about how the company is going to perform today, tomorrow, or even next year. His primary concern is where the company will be 10 years from now or 15 years from now. But how do you know how a certain company is going to perform in 10 years? It's almost impossible. That's why Buffett almost always invests in companies with simple business models. This is the product, these are the customers, and this is why they're going to buy this product. You don't have to be genius to understand their business models. It's so simple that even a little kid would understand that model. That's what Buffett loves, because the simpler the business model, the easier it gets to predict the future of that company and if their products are going to stay relevant 10 years from now, for example. The second trait that Warren Buffett looks for is, will the customer buy the product again? If you have the kind of a product that would sell once and the client wouldn't need it anymore, then your market is limited. A great product is when your client would keep coming back for it every now and then, whether it's every day or every week or even every year. Like bread, for example. If you're selling bread, you would expect the exact same customers to come back tomorrow or next week over and over. And 10 years from now, people would still buy bread. You might sell it in a different way or in a different form. You might improve its quality, make it tastier, package it fancier, but it's still the exact same product. In fact, this factor is so important that it led to the rise of subscription business models, where businesses would charge you a little fee every month like Netflix, for example, or every year like Amazon Prime. Because it's a more sustainable strategy. Once you acquire the customer, you keep generating cash flow theoretically forever. Finally, the third component is the brand. People have the tendency to buy from the companies that they feel connected to and familiar with. Whose sneakers would you buy? The first ones are from a brand that you have never heard of, and the second ones are good old Nikes. Even if they are cheaper and look fancier, you probably would hesitate to buy them because you simply haven't heard about that brand before. On the other side, you easily recognize Nike. It's a well-established brand and is known for making great sneakers. You might already be wearing a pair of Nike shoes. So which one would you choose? And that's why Buffett pays such a critical attention to how powerful is the brand name before throwing his billions into that company. He understands how much of an influence it is going to have on the consumer's decision. In fact, if the brand is strong enough, consumers would buy almost anything that company produces. And now, since we know Buffett's secret formula, let's take a look at his portfolio and find out if he practices what he preaches. Warren Buffett has always stayed away from tech companies, but in 2016, he made an exception and invested billions of dollars in Apple. In fact, his company Berkshire Hathaway holds almost $1 billion Apple stocks, worth an estimated amount of $118 billion. It's his biggest position, at least for now. Apple of course doesn't sell bread, but if you pay attention, it has all the three traits that we have just talked about. Their business model is simple, at least for now. They want to keep making devices that people just need on a day-to-day basis, such as an iPhone or MacBook. They rarely come out with super innovative products, but they just know how to make a smartphone for the average consumer. Do Apple customers come back again over and over? Yes, they do. iPhone is of course not a necessity, but people keep coming back for it every September. In fact, in the last 10 years, Apple has drastically been shifting to a subscription-based model. It's not enough to have an iPhone, you need a subscription to Apple Music, Apple TV, iCloud, and a million other things. And lastly, does Apple has a strong brand name? Of course, it is probably the most powerful brand in the world. His second largest investment is in the Bank of America. He holds $29.8 billion worth of shares of Bank of America. We're not going to get into the details, but you get the picture. Their business model is straightforward. They have a strong brand and their clients keep coming back for financial services. And it doesn't seem like people will no longer need financial services in the future. That's why he has also invested in other banks, starting from Wells Fargo to Goldman Sachs. He was also a huge investor in many airlines, but 2020 forced him to sell all of his airline shares because the future of this industry seemed too unpredictable. He also holds $21 billion worth of Coca-Cola stocks. In fact, he started investing in Coca-Cola back in 1988, and his investments since then have grown by over 16 times. What do they sell? A drink. Who are their potential customers? Pretty much anyone who is thirsty, the entire world. Is it a one-time product, or their clients keep coming back for it? Of course, they will keep coming back for it. Some people drink like 4 or 5 cans a day. It's addictive. It's not easy to quit even if it's unhealthy. However, it has a lot of competitors. I mean, the shops are filled with an endless numbers of soft drinks. But the Coca-Cola brand name is so powerful that out of 20 or 30 options, you easily recognize it. Most people would probably pick Coca-Cola without even thinking. And if it's out of stock, you probably would go to another store instead of choosing one of the 30 other options they have. He's also a major investor in American Express, Kraft Heinz, and US Bancorp. I can't name them all because there are too many of them, but I will leave a link where you can find the rest of the companies. Besides his investments in publicly traded companies, he also owns entire private companies, or a significant majority, like in Gillette for example. He purchased $600 million worth of Gillette shares. Gillette holds the exact same position in its industry as Coca-Cola does in beverages. They're like twin brothers. Regardless of what happens, people will still shave, and their products are just filling that basic human need. You don't need to have an IQ of 500 to understand why people are buying razors or why they will keep coming back for that product even 10 years from now. But of course, Gillette isn't the only company in its industry. It has a ton of competitors. However, if you ask anyone to name a razor brand other than Gillette, 99% of people won't be able to do that. Do you see how it perfectly matches with all the requirements that Buffett has? It's a simple product that people keep coming back to buy it over and over. He's also a huge investor in Geico, Duracell, NetJets, Seascandy, McLean, and many others. His portfolio is so diversified that if one industry suffers, it will not have any meaningful impact on his entire net worth. Berkshire Hathaway suffered tremendously this year, but it has grown back to its pre-pandemic levels already, and I won't be surprised if this company will join the $1 trillion club in the next few years. And now it's your turn. Are you an investor in Berkshire Hathaway? Do you think that his strategies are still relevant to this day? Let me know in the comments below. Thanks for watching, and until next time.